Hello, everyone. I'm Joanna Ossinger with Bloomberg News. I am the Asia crypto editor and happy that all of you are here. Have a very exciting guest today. We'll be chatting with Olaf Carlson-Wee, who is well known in the industry, and we'll get a sense of what he's thinking about all sorts of things. So I'm just going to get right into it. Olaf, I guess if you want to talk a little bit about yourself, maybe, but again, everyone knows who you are. And maybe just tell us kind of how it's going in these crazy times with the pandemic. How are investments going? Is anything really changing because of it? What's up?
Yeah, so to very briefly give my background, I got into Bitcoin in 2011. I joined Coinbase as the first employee and was the head of risk there for several years while that company scaled before leaving to launch Polychain in 2016. So Polychain today invests across the entire sort of blockchain sector, both in cryptocurrencies as well as in the equity of businesses building in this landscape. I actually would argue that the COVID pandemic as well as the policy response to COVID has had very little effect on the cryptocurrency industry and its operations as a whole. I think that most of this industry was already sort of native to the internet before any of this. And so doing remote meetings, making investments in countries I've never been to, and having primarily kind of phone call and video mediated contact with founders we work with teams we work with, and within our own team at Polychain was pretty standard before any of this. So I think in general, I don't see crypto as being a very affected industry in general, one way or the other, because of COVID or the policy response to COVID.
Okay. And how is the crypto fund industry doing overall? There've been, I think, a lot more people coming in from traditional finance. There's been more derivatives and things like that. Is that making the industry mature, or is it kind of staying the way it was? What do you see changing about that?
There has been a huge amount of consolidation in the cryptocurrency fund landscape. In 2017 and 18, you saw the launch of literally hundreds of funds investing in this category. Most of those did not survive crypto winter, so to speak. And in that time period, there was a lot of consolidation around larger funds that sort of had the financial resources and dedication to make it through. So I do think there's been significant consolidation in the fund landscape. I also think that one of the interesting things that has happened over the last several years is that trade volumes have just grown dramatically. Between 2017, 18, 19, and now 2020, you've seen a huge growth in trade volumes, both in spot markets and especially in derivatives and futures kind of markets. So what that means is that there's been a lot more sophistication in financial and trading infrastructure in cryptocurrency, and there's been a lot more sophisticated trading groups and market makers enter this space and provide volume there. We sit more on the venture side, right? So we're doing early stage investing, buy and hold with a long-term view. And that venture landscape, has just seen a lot of consolidation. I just think that generalist VCs in late 2017, early 2018 often made their first kind of dipping a toe, so to speak, investments in this category. Many of them got burned, making investments in a category that they didn't really understand. So I think that a lot of generalist VCs have actually stayed away from this area, and we've seen the launch of focused cryptocurrency funds and a lot of consolidation around several very large funds.
Okay. Interesting. So let's talk about some areas that you're looking at these days. So what's going on in DeFi, for instance?
Yeah, so we've been really excited around this category of smart contracts, which are kind of these automated systems to replace pen and paper legal contracts that are enforced in a specific geography or jurisdiction with reliance on, courts or arbitration or things like that in order to enforce the contracts. For all of these DeFi instruments, the reason it's such a big breakthrough is that you get the ability for any two people around the world to enter into basically an arbitrary financial agreement without concepts of geography or identity or underwriting or anything like that. And so it's a very, very powerful concept. And what we've seen is the emergence of the first sort of financial protocols that rely on smart contracts that really have significant product market fit and significant scale. I think that there has been a big question from the investor community over the last several years about how this area will be monetized. So suppose you have a smart contract that does tens or hundreds of millions of volume, whether it's in lending or trading or something like that. How ultimately, as an investor, can you accrue value from that? Or is this kind of a pure open source system and that nobody makes money from? You know, like Wikipedia is a great thing for humanity, but it wouldn't be a great situation to be an investor in Wikipedia. So I think that it was not clear that there would be value accrual in these smart contract financial programs, effectively. And now, though, what we've seen is coalescence around a model wherein token holders sort of govern that underlying system. And a lot of what we call this internally is sort of like an internet sovereign corporation, where it looks and feels a bit like a business, but there's not a specific jurisdiction or geography in which that business is incorporated, and there's not really any shares that represent interest in that business, nor is there sort of a business office or anything like that. The business model itself is just the code embedded in the blockchain, and it accrues value to a group of token holders who govern the parameters of that code. So these sort of sovereign corporations, you know, I think that MakerDAO was probably the first example of this to reach any significant scale. And now we've seen the launch of Compound, and Compound has also reached significant scale. And we were sort of the first investor in both Maker and Compound. I think these are not, these are not the end of all this. This is actually the very, very beginning. So I think we will see many, many of these sort of internet sovereign corporations launch. And those business models, you know, will start out as sort of pure smart contract systems. Over time, I think they will become a bit more hybrid and interact a bit more with real world assets. And rely on, for example, paying contractors to go enforce things in the real world on behalf of that sort of internet corporation, so to speak. So I think that this trend is really powerful, where you can embed all of these instruments in a blockchain and then have a sort of new mechanism for organizing humans and capital in order to manage that underlying smart contract logic. The only other thing I want to mention regarding this is that, today in these smart contract systems, you see primarily financial instruments, hence the name DeFi, decentralized finance, right? One of the reasons for that is that Ethereum today, where all of these things are hosted, is best suited for mathematical logic. So Ethereum contracts can calculate, for example, compound interest or multiplication and division or things like that. But Ethereum contracts are not very well suited today for example, serving an image to the end user or serving text to the end user. And so a lot of what we've seen emerge are financial applications. But I think over time, as we see more flexible low-level protocols, you're actually going to see the emergence of what look more like traditional web applications that are managed by these sort of internet sovereign corporations. So it's not just going to be a lending order book managed by one of these systems and one of these corporations. You're actually going to see, for example, social media applications that are collectively owned by the community of users. I think that it will be a couple years until we see the emergence of the early stages of those because they are reliant on more flexible and expressive protocols than what Ethereum can provide today. But it is an area we're very excited about. I think DeFi is just the beginning, as in financial applications are just an early use case that's well suited for the relatively clunky blockchains we have today. From a perspective, and these early mechanisms for organizing humans and capital to monetize those financial applications are also very early days. So I think both these trends are very powerful, and we're excited to keep investing in them.
Okay, so you think the next Ethereum, for instance, is a ways off? You said maybe a couple years, or do you think it's out there now and just developing?
No, I think it's very close, actually. However, I think the mainstream applications of it are a while off. DeFi, is having a very big moment in 2020. Ethereum launched in 2015, right? Mm-hmm. So these things can take a while. The word DeFi was invented in August 2018, right? That was when it was popularized. So I think as investors, we talked about programmatic finance was what we used to call it before DeFi at Polychain. And we were investing in this concept of programmatic finance throughout 2016 and 2017 before the word DeFi was really popularized. And it's only in 2020 that we've really seen these systems reach significant scale. So these things do take a while to deploy, right? And the launch of the low-level protocol is just the beginning. Then you need lots of entrepreneurs to come in and actually build useful applications on top of that low-level protocol. And then in addition to that, you need appropriate abstractions. Most of these DeFi systems today are extremely difficult to interact with. I would never wish it upon my parents to have to sort of navigate some of these DeFi financial products. However, entrepreneurs historically have been very good at taking complex low-level technology and abstracting away the complexity to only deliver value to the end user. That's basically the story of the entire internet. I mean, what we're doing right now with this video conference, I don't think any of us really understand deeply how this, video encoding and decoding and the TCP/IP protocol is like transmitting, all this information to each other in real time, all the audio codecs and everything. It's very complicated, but for us, it's easy to use because we just click a button and here we are. So those types of abstractions are going to be critical to also bring DeFi to sort of 10x or 100x. The next 10x or 100x and the number of users here is going to require significant abstractions of these low-level systems.
Interesting. Okay, and what do you think about liquidity mining, for instance? Going to another topic.
Yeah, so I think, and this, this isn't a topic people want to talk about right now because Compound, what they've done is they've taken that sort of governance ownership token that can govern the low-level protocol, and they've said, the more you contribute to liquidity in the Compound kind of lending book, the more tokens you will earn, right? In a sort of block subsidy, much in the way that Bitcoin works. And one of the ways I think about this is it's actually quite similar to the way Bitcoin has been launched with block subsidies, but over time, the plan tentatively is to rely on compensating miners exclusively with transaction fees. If you launched just with transaction fees, I don't think Bitcoin would have worked. And of course, Bitcoin had an issue of how would we distribute it. You sort of need to have block rewards to distribute the coin. It's kind of a chicken egg problem. But that subsidy allows the network effects to organically build. And then, once the block subsidy goes away, there's sort of an existing flywheel and it can keep operating without that subsidy. And so these concepts of like liquidity mining or basically mining and network effects is one of the way I think about it. Like I call it network mining sometimes. And liquidity being kind of a subset of different types of network effects. One of the tricky things with building financial services application or building a web platform is that all the value for the individual user stems from the number of other users in that system. So the only reason we trade on an exchange is because there's other traders. And the only reason I use, say, Instagram is because there's other users. But of course, then being the first user is pretty tricky because why would I be the first user on an exchange or the first user on Instagram? And so bootstrapping network effects in web platforms and financial products has historically been pretty difficult. What liquidity mining does not do is solve product market fit, right? It doesn't mean that the underlying product is useful to the end user. However, once you have product market fit and you have a useful product to the end user, this concept of kind of network or liquidity mining is like gasoline on the fire, so to speak, for network effects, where you can actively subsidize the acquisition of new users, much in the way that PayPal famously did with referral codes. We did this at Coinbase pretty extensively, where we would actually pay people to sign up and buy Bitcoin. And in this case, you're actually giving them an ownership stake over the future success of the protocol that they're helping bootstrap. So it's quite logical in my mind. The mechanism to compensate these users is effectively equity in the thing that they're helping make valuable, right? And so this idea of sort of community-owned internet services and financial services is very powerful to me. And liquidity mining or network mining is a really powerful mechanism to distribute ownership in that decentralized system. So I am really, really excited about this network mining model, and I actually think it's going to be used a lot to bootstrap network effect-based systems in blockchains for the coming years. Now, that said, I also think there will be a lot of confusion in the market wherein people will think that the liquidity mine makes for product market fit, when in fact it does not. It only accelerates the network effects. It doesn't mean the underlying product is good or useful.
Okay, good to keep in mind. So another theme that's starting to come up more these days, central banks and digitizing money, digital currencies. Looks like some movement in China on that front, for instance. How do you think that's going to change the landscape in crypto and blockchain in what you do?
Yeah, so one of the most startling things for me was reading the technical specification for the DCEP initiative, which is basically China's project for digitizing the yuan. And the remarkable thing about that document was that it read like a technical specification for a blockchain. It talked about these concepts of time epochs, cryptographic signatures to validate transactions, ways transactions would be propagated throughout the network. It talked about concepts of like finality. It was pretty remarkable how much that DCEP initiative had borrowed from traditional blockchain engineering. The only aspect of it that, of course, was missing was basically the peer-to-peer network layer, right? This is not going to be an algorithmic monetary supply the way a system like Bitcoin is. But that said, it's a massive legitimization of these blockchain architectures and the fact that they're useful, right? The Chinese government would not be working on digitizing the yuan using a blockchain-like system unless they felt that it was strategic for them. So it's, I think, a very big deal for cryptocurrencies, and that we are going to see much more significant and fluid interoperability between centralized bank digital money systems and cryptocurrencies. It's simply a lot easier to sort of build, like, for example, a Bitcoin to US dollar exchange if the US dollar is also, loosely speaking, a cryptographic system, like a blockchain-based system. So I think it's a strong tailwind for cryptocurrency. I also think this is highly strategic by, China. I think that China is trying to, intelligently replace the US dollar as the Federal Reserve currency, and that the primary tactic they're employing to do that is by digitizing the yuan. So I think it's a powerful move by China. And, what we saw after the, Facebook Libra hearings, where Mark Zuckerberg was sort of roasted in front of Congress, was the president of China, Xi Jinping, the next day say that China's investing in it was kind of the most resoundingly positive thing he could have possibly said. It was basically China's investing in blockchain R&D. We welcome this industry. We think this is the wave of the future. We want this technology to be in China. And, I do think there is a moment here where the United States has a choice where a lot of this future Silicon Valley, so to speak, that's based on blockchains, can be based in Silicon Valley, like the internet was, or it maybe can be based in Beijing. And I do think that the different postures of these states will have a big impact on the wealth generation and where it goes over the next 10 years.
Wow. Okay. So switching gears back to Polychain now. So what else are you looking at for in terms of investments? You've talked about some of the areas that are interesting, but what are tips that you would give, say, a startup, or what are some places doing right and some doing wrong? What are you looking for?
Yeah, I think in general, we are looking for new breakthrough technologies that are based on real computer science breakthroughs and research breakthroughs. Or we are looking for new business models that are uniquely enabled by those research breakthroughs. So to me, as an entrepreneur, you should ask yourself, am I working in one of these categories, right? Is this business model uniquely made possible because of some feature of the sort of platform we're building on, or am I building like a totally new platform? So to me, as an investor, those are kind of the two categories that I'm very excited to be backing.
Okay. And what is on the horizon for Polychain? Are you going to be doing kind of the same stuff you've been doing? Are you trying to change strategy at all? What are you looking at?
Yeah, I think we've been extremely happy with generally just how things have gone with our model, which is early stage, seed stage, kind of first money into companies and projects, long-term oriented, buy and hold. I think that empirically this has been absolutely the best approach to investing in the entire blockchain space. People can absolutely make money doing algorithmic trading strategies or things like that. But the reality is, with Bitcoin, the best way to make money was to buy Bitcoin early and just hold it. It really wasn't doing anything else or anything fancy. Similar to Ethereum, I think the best way to make money with Ethereum was to buy Ether very early and hold it. It wasn't to implement a trading strategy. I've never heard anyone say, I wish I sold more Bitcoin, who's been in this for a while, right? So, in general, I think that we are not really deviating from the model we've had in the past at all. And while what we invest in changes based on the sort of, deployment of this technology, right? Like, you can't invest in a business based on smart contracts until you have seen the launch of Ethereum, say, right? There's an order of operations here based on how these technologies evolve. But generally speaking, I really like our model, and we're just going to continue to do our model.
Okay. And is there anything else kind of on the horizon for you personally in the crypto and blockchain world? Are you just doing Polychain, or are you looking at other initiatives, for instance?
Yeah, I think we are definitely, at this point, very involved in staking and proof of stake protocols. So we're running the largest staking operation in the world by just sheer amount of dollars staked in proof of stake systems. I'm pretty sure by a pretty large margin. And that's simply by virtue of the scale we have as investors in these protocols. But that staking operation, I think, is, it's becoming a bigger part of what we do as we want to take very active participation in the networks in which we invest. In addition to that, we are thinking about ways that we can get more involved in these various DeFi protocols that we are investors in, beyond just governance, which we're already doing today, and staking, which we're doing today. But I think beyond being very, very active investors in the things we purchase and sort of participate in these network protocols, as well as govern these network protocols, I think beyond that, right now I'm just very excited to partner with more new early stage entrepreneurs that enter the cryptocurrency space and are dreaming of, the next big thing. So, I love talking to people that have very big ideas about the future in this category.
Mm-hmm. Okay, and one thing I thought was interesting as I was, thinking about you is, there are articles, for instance, that say, have you gotten respect and call you the crown prince of crypto and this sort of thing. So I'm just wondering, kind of, as the industry evolves, do you feel like you're getting that respect? Do you feel like you're still sort of working to convince people that crypto and blockchain are legitimate, or is this, do you feel like people are really taking you seriously and respecting you at this point?
I mean, the best way to silence the haters is just to prove them wrong empirically. I think I have been trying to convince people this is a big deal for almost 10 years now. The people that listen to me, I think, have done very well. So to me, I don't really care about convincing anyone of anything. I just care about us, succeeding beyond what anyone imagined was possible.
Okay. That sounds great. I think we're almost out of time. So any final thoughts you have?
Only that, if you're an early stage entrepreneur, interested in, building something that will define the future, reach out to me and my team. And in addition to that, if you're interested in working at the world's most advanced cryptocurrency investment group, let me know.
Excellent. Thank you so much for your time, Olaf. Really appreciate it.
Yeah, thanks, Joanna. Thanks for having me.